Coming up in today's episode, blue chip companies continue hiking their dividends. A much anticipated acquisition finally looks like it will go through, but it's not all sunshine and rainbows as there are some dividend cuts happening. All this and much more in today's episode of Dividend News. For our first story, let's take a look at some companies that recently announced dividend increases. As a younger investor, one of the most important dividend metrics for me is the rate at which a company has grown their dividend and the rate at which they can continue to grow the dividend into the future. So that's always something that I'm looking at. First up, we have the massive bank of JP Morgan. Sometime over the summer, they did verbally kind of announce that they were planning a dividend increase, but they hadn't actually declared it. So they recently did declare that dividend at $1.05 per share per quarter, and that is a 5% raise over the previous dividend of $1. I am satisfied with the 5% raise this year, but I would like to see a little bit more over the next few years. They do have a little bit higher rate over the past 5 years, and I think they can kind of get a little bit closer to that in the next 5 years as well. But given sort of the economic uncertainty and just tough times we're going through a little bit right now, I'm perfectly happy with the 5% raise. The next notable raise is from Starbucks, and they raised the dividend 7.5% to 57 cents per share per quarter. And this is a little bit below their 5-year average, but again, that's a very healthy amount for sure. Moving right along is Texas Instruments with a dividend hike of 5% to $1.30 per share per quarter. And as noted in the press release, that marks 20 consecutive years of dividend increases. Their business is certainly having a little bit of a slowdown right now as they kind of go into the down part of their cyclical trend for their business. But I think, over the next few years, they'll be able to recover. So right now that 5% raise is probably, pretty prudent from management, but in the future, hopefully they'll be able to raise it more and get closer to something in the double-digit range, which I think they'll be able to do. And the final company I'll mention for dividend raises is Microsoft with a raise of 10.3% to 75 cents per share per quarter, which is right in line with their 5-year average growth rate. And also they are the largest payer of dividends in the United States at $22.3 billion of dividends paid annually, and they're far ahead of others. Apple is in second place with $15 billion annually, and that's truly a testament to the amount of cash that their business generates. As well, the dividend hike shows that the business is still growing at a nice rate. And some honorable mentions are McDonald's, Lockheed Martin, and Honeywell, which are all expected to announce a dividend increase sometime in the next month or two. Although the aforementioned companies hike their dividends, not all companies are doing quite that well, which is what we'll talk about next. In particular, REITs have been struggling recently as interest rates have risen, and this REIT we'll talk about has some additional challenges as well, and that REIT is WP Carey. So primarily this company focuses on industrial, warehouse, and retail properties, but they do have some commercial office space, which has certainly struggled in the past few years as people are working from home more and more, and companies don't want to, rent office space if people aren't going to utilize it. So as a result, they are pretty much completely getting rid of their office properties, and they're doing that in 2 ways. So first of all, they are spinning off 59 properties into a separate publicly traded company. And then second of all, they are planning to sell about 87 office properties after the spinoff takes place, and just liquidate those from the business. So as a result of all of that, they're most likely going to be cutting the dividend in the coming months. Right now, there's no official declaration. We just got a little quote from the CFO that said they expect the dividend will likely be cut, and there's really also no indication of how severe the cut will be either. Another hot topic over the past 2 years has been Microsoft's proposed acquisition of the video game publisher Activision Blizzard. So Microsoft initially announced their acquisition plans in January of 2022, and since then the UK's Competition and Markets Authority as well as the United States' Federal Trade Commission have both blocked and opposed the deal. So in the US, the FTC's challenges so far have been unsuccessful. And also in the UK, Microsoft has made some concessions and remedies that appear to address the CMA's concerns. So the CMA has still not officially approved the deal, but it's looking like that will happen soon. And they put out a press release today on Friday that basically said that Microsoft's concessions kind of addressed the issues that they had. Currently, October 18th is the date that Microsoft has set to finalize the deal with Activision buy, but it has been pushed back before, so there's nothing to say that will be, the be-all end-all date. It could get pushed back even more potentially. Interesting as well is there's currently a breakup fee of $4.5 billion. And what that means is if the deal goes through or if it's somehow blocked by regulators or something like that, then Microsoft will have to pay Activision Blizzard that sum if something happens in the end and the deal doesn't end up going through. So it does seem like Microsoft is, really betting on this to happen. And even though it's not, finalized for sure, they certainly think it's going to happen. And then also the market certainly thinks it's going to happen because right now, the stock price of Activision Blizzard is up to about $94 per share, and it moved that last little bit today on Friday, and that is about $1 shy of what the buyout price would be of $95. So the market is pretty much pricing in the buyout and, preparing for that to happen. Now we're going to shift to look at some dividend stocks that are trading at or near their 52-week lows. So currently the market is down just about 6% from its highs at the end of July, but there are some dividend stocks that are down much larger amounts. The first four companies we're going to look at here are Target, Amcor, Leggett & Platt, and finally Realty Income. So all these companies are generally facing some sort of headwind or unfavorable business condition. So I would say the depressed stock price is not entirely unwarranted, but at the same time, all of these companies are at 52-week lows. And for the most part, I would say I think the stock prices are below or maybe even well below what the fair value really is, in my opinion. And additionally, all of these four companies that I mentioned are dividend aristocrats, which means they have raised their dividend for 25 consecutive years or more. And then actually two of them, which are Leggett & Platt and Target, are dividend kings, which means they have increased their dividend for 50 years or more. So that just shows that these four companies, even though they're struggling a little bit right now, they have a very strong record of paying dividends and paying ever increasing dividends. And then the honorable mention stock for this category is HP Inc. They have been down a lot recently, even though they aren't at 52-week lows. The stock has fallen almost 20% in the past month or two, and the past few weeks additional decline was mostly spurred on by in earnings disappointment for Q3 earnings. And in my opinion, I think HPQ is a reasonably high quality company with pretty solid management. They have a strong balance sheet, and as well, I think they just have a reasonable and coherent strategy moving forward. And even though, like I said, they're not at 52-week lows, I do think the stock is undervalued at these prices. And for the final news story of the day, I have a free Discord server where other long-term investors discuss their portfolios, their investing strategies, kind of what stocks they're looking at or what they're buying, and kind of share just their overall thoughts about various investments or strategies. So if that's something you're interested in, click the link in the description and we would love to have you. Thank you so much for watching the very first episode of Dividend News. I've been your host, Frank Mularcik, and I'll see you all in the next one.